Welcome to Orlando Matters. Today we're talking about the health of the U.S. economy and also some downtown developments. A new proposal was just approved for a high-rise there in downtown Orlando. So the question this morning, how do city leaders strike a balance between progress and also preservation? Also, many people think crime in Orlando is extremely high, but the numbers don't really reflect that belief. We're going to talk with Orlando Mayor Buddy Dyer about his efforts to make the city beautiful, also the city safe. But we begin this morning with a look at the state of the economy. Certified Financial Planner Joe Bert with Certified Financial Group joins me this morning to talk. Joe, always good to see you. Appreciate you being here today.
Sure.
You know, let's start with an overall look at the stock market here. The NASDAQ, it's dipped a little bit now, but the NASDAQ recently at record highs. The Dow still up in record high territory. It seems like things are going well, yet there's this unrest that always seems to be there. What's going on?
Well, there's always unrest, and of course you have to look at what's going on in the news. The major events in recent times have been what's going on in Greece, their economy. Are they going to be in or out of the euro? And somewhat to some degree what's going on in China. The Chinese economy is slowing down, and they're big consumers, and they affect the world today.
You know, a lot of people also worry about our debt, especially with China.
Sure.
Does that concern you? When you talk to your clients, is that something that even comes up?
No, it used to, but not as much as, and really, China does not really hold that large a percentage of our debt. It's only, I think it's about 20%. But it is a big portion of the trillions of dollars of debt that we have. But the important thing, John, is that China needs us to be healthy. So they're not going to play games to try to impact us because they need us to buy their stuff.
Well, and that's why we had an economist on the show a couple of months ago, and he said people are so worried about our debt, not realizing that as China gets better, we're going to be able to sell more of our stuff over there, which is going to help us in the long run. And people lose sight of that, don't they?
Exactly. Well, the key is it's a world economy today. We're no longer isolated. Although the United States economy is doing better than most of the world economies, we're still not doing as well as we should be doing, given all the stimulus we've had in the last several years.
Yeah, let's talk about also something in the news recently. Fed Chair Janet Yellen says that interest rates are going to have to eventually rise. We know they've been at record lows for so long, possibly later on this year. What do you think that is going to do? If she raises those, or if the Fed raises those, what is that going to do to the economy, you think?
Well, first of all, certainly interest rates go up. It's going to have an impact on the stock market. I think some of that's already been baked in. Now, some people are predicting September as the time to do it. I think there's a 50-50 chance of that happening in September. But we have to look at what's going on with the job market. You know, we have 5.3% unemployment, which is pretty good, but we have a low participation rate, which is affecting those numbers. And then what you want to look at is really what's going on in the world economy. And if she does raise interest rates, it's going to have an impact on our ability to borrow, because everything ripples through on interest rates, which is your credit card, home mortgages, car loans, all that stuff. So we'll have an impact.
On the flip side, some of your bonds are going to start finally getting some good yields, right? That's the part people I don't think they remember. That's some people rely on that.
Right, and the CD rates. Look at what CDs have been. So nothing. Exactly, exactly. Then you don't have to give back the toaster when you put the money in the bank.
Yeah. Put the money under the rock is about the same thing right now. Speaking of that, retirement. You and I have talked about this numerous times. We've heard the word retirement crisis in the news time and time again. More and more people don't have pensions. They're not saving enough. What are you seeing in your practice?
I'm seeing the actualities of that, John. We really do have a retirement crisis in this country. And the reason being is because the baby boomer generations, the millennials, the folks behind me don't have the pensions that our grandparents and parents had. You know, in the old days, the folks retired were at the same company 25, 30 years. The house was paid for. They had a pension, had some Social Security, and things were good. Today, most companies today are eliminating the pensions, and the government pensions are frankly in trouble as well.
Yeah, and some of the reasons they eliminate the pensions is they say, okay, we're going to give you some extra money, percentages to put into your 401k.
Yes.
We're finding out people aren't taking advantage of the free money, are they?
No, they're not. And that's really, I think, the only way that people are going to accumulate wealth today. The average worker today has to maximize their contribution to their 401k. If they don't have a 401k, at least do an IRA, because you get a tax deduction when you put the money in, and it'll compound and grow for you without being taxed.
I'm sure a lot of people come to you and say, Joe, I'm going to retire in, fill in the number 15, 20, 25 years. I've saved nothing until this point.
Right.
How do you counsel them at that point? Because they think it might be too late to start the 401k. In significant numbers anyway.
No, if you have that amount of time frame, you've got a lot of time. The toughest cases that I work on are clients that have already retired and didn't save enough money, and they thought they did. And they don't plan on all the expenses that you have in retirement.
Okay, very quickly, what do you tell them to do then?
What I tell them,
you're hitting retirement, you don't have the money.
Exactly.
Sell the house?
You have to make some major lifestyle changes. You have to look at what you're spending, how long the money will last, maybe consider reverse mortgages, downsize, all those things. Because if you continue on that path, you're going to be eating dog food.
And what about this new dynamic here where not not only are people retiring with house debt,
right,
they have student loan debt.
Student loans.
The number of people my age, and I still have some, but who are going to have it into their 50s is astronomical.
Yes.
I don't know how they're going to balance that at some point.
You've heard of the sandwich generation. It's the generation that's taking care of their parents and their kids. Kids are living in the basement, and the parents are taking care of them in long-term care. That generation is really being squeezed. They don't have the resources that our parents and grandparents had.
Maybe this is some of the reason that you have all these naysayers. You hear them on the radio, you read them, their ads pop up all the time saying, hey, the end is near. What are your thoughts when people say that? Is that just scare tactics, or is there maybe a little something to it? There's got to be something to it.
Well,
a little bit, just to cook people.
I'll tell you what, if I was doing it, there's profit in it, because if those folks make a lot of money selling newsletters. Remember the major two things that drive people are fear and greed. And so they're playing off the fear to tell you how to get around it, or they're telling you how to make money. And those newsletters, John, I see them all the time. I've seen them in the 35 years I've been in this business, and they go in the circular file. Do not buy into that. And unfortunately, your coworkers are getting that, or your relatives are getting that. They're telling they got the inside word. That's been around forever. Nobody has the secret formula.
I hear this time and time again, too, and I always want to say that, history repeats itself. We all know that. But the same people who are saying the end is near, especially for America, are the same people who may have said the same thing. I mean, go back in time during the Great Depression. I mean, you've had many periods when it didn't look so good. What are your thoughts? I mean, obviously we're in a difficult period, but it's not the end.
We're in no more difficult period than we've ever been in history. Things are always cyclical, but what you have to do is have a long-term perspective. The United States is still the greatest country in the world. In order to get ahead today, you have to get your money working for you. You need to be an owner of things. You need to own things. So what are you going to own? You can own real estate if you know what you're doing there. You can own commodities if you know what you're doing there. Or you can own an ownership interest in businesses. And the way you do that is through individual stocks, which I don't recommend, but buying them through mutual funds is what I do recommend, because that's where you get the growth. But unfortunately, most people don't understand that stuff. They don't teach us this stuff in school, which I think our educational, that's where our educational system has failed dramatically.
Okay, so if people are watching this, they say, okay, I'm motivated, I know I need to save. What's the one step they can take coming up on Monday to at least put them on the right path?
Well, first of all, they need to figure out how much they need to save. And the way you figure that out, or the best way to figure out what you're going to do, is figure out what you're spending and what you have left. And most of us, unfortunately, spend everything we get. You have to discipline yourself. And that's why saving through your 401k, where you save, it comes out of your paycheck where you don't see it, or have a automatic payment coming out of your checking account going into your IRA. That's the best way to do it. Force yourself to save. Put in growth mutual funds, because that's where long-term you're going to do fine.
It's funny you say that. What classic book, Richest Man in Babylon, right? Pay yourself first. It's been around forever. And yet we still treat it as somewhat new.
Yes. You got to pay yourself first, because if you don't pay yourself first, nobody else will do it. And when you come to the end of the day, if you only have Social Security to live on, you're living below the poverty level.
That's going to be tough. All right. Hey, Joe, if people want to get in touch with you, what's the best way?
All you have to do is Google me. Joe Bert, B-E-R-T, 2 words.
All right. Always good to see you here, Joe.